China's rise to economic dominance. This is the story of how China actually orchestrated its rise to economic dominance, and why the consequences of that orchestrated growth are so costly that China may now be facing imminent collapse. Now it's obvious the rise of China over the last 40 years has been nothing but epic, spectacular and unprecedented. Just 40 years ago it was an agrarian nation. The people were all just farmers, subsistent level farmers at that. Even in 1990, 99% of the population still lived in poverty, which is measured as under $5.50 per day, and 40 years ago their total GDP was only $191 billion. Now, to put that into perspective, that's the size of a regular company in the US stock market. T-Mobile, Comcast, Cisco, Shell all have a market cap of around $190 billion, but today, just 40 years later, over 75% of their entire population has been lifted out of poverty. That's like a billion people. They have 6.2 million millionaires in China, which ranks second just after the United States. Their total GDP for the country is now 18 trillion, which makes up 17% of the entire global GDP, and is second only to the United States, which is at 27.7. China's growth happened so fast. Trillions. So how did they achieve this growth so fast and from such a small start? Well, for starters, when Ma was in charge of China, he killed like 80 million people through starvation and bad decisions. So at some level it's like you can only really go up from there, and that's exactly what they did, because after Mao, China tried a little bit of freedom. Now, considering how free, or I should say how not free, China is, they are an extreme outlier globally in terms of their economic growth compared to their freedom score on this chart. Countries with a blue dot are generally rich countries. The green dots are upper middle, orange dots are lower middle, and the red dots are the poorest countries. Generally, the richest countries are also the most free, China being the extreme outlier, being an extremely rich country compared to the rest of the world, but having almost zero freedom. Now, without how China achieved this growth, having an economy that is able to establish growth through innovation and freedom from the bottom up. The only way to orchestrate economic growth is through two different methods. Number one, top-down economic control, and number two, debt. And boy, do they have a lot of debt. As recently as 2012, the national debt compared to GDP in China was only 34%. But that has absolutely exploded recently, as they've borrowed more and more to continue their high GDP growth rates, to the point where their national debt to GDP is now 83% when you take into account other debt other than just the national debt. They currently have a total debt to GDP ratio of a mind-crushing 287. Now, in reality, the actual debt that China has is unknowable and much larger than that, because the local governments have legal limits on how much debt they can have, and so there's a loophole where they get around this by establishing things called local government financing vehicles, which are just separate entities that carry all the extra debt, instead of the local governments. And the thing about debt is that eventually it's got to be repaid, and up until recently, this didn't seem to be a problem because the top-down centrally planned way they controlled the economy seemed to be orchestrating enough growth to pay for that debt. But as the Austrians always point out, the problem of economic calculation is one that cannot be solved at the central level. It is a problem that can only be solved decentralized by each individual in the system. Here's a great example of this. A while ago, real estate investing in China was heavily incentivized because it worked. And without freedom you didn't have other money, other capital flowing into your country, so you don't have sophisticated financial markets. And so, in China, the average person didn't have access to a 401k or a brokerage account. So they just bought real estate instead. For a while this caused a boom, and then, because of the malinvestment caused by the top-down planning and all of the debt, suddenly you have a bubble. Over the last couple of years China's tried to crack down on that, but when you end up popping a bubble that big, you have collateral damage everywhere. And obviously the last couple of years have been terrible for China, and everybody knows it, but most people are not aware of how bad it's been getting recently. China's stocks have a valuation that is currently at the lowest level than it's been in a decade when compared to the US. The difference between the price to earnings ratio in the United States versus China is the greatest difference it has ever been. In fact, the difference is a staggering 38 trillion. Now, for many years Hong Kong was ranked extremely free on the global freedom ranks, and as a result it brought in a staggering amount of wealth from all around the world. That is no longer the case, as stocks in Hong Kong have erased more than $6 trillion since their peak in 2021, and the number of underwater mortgages in Hong Kong are now at a 20-year high. Now, as one might expect, this means that sentiment in China is in the trash can. Foreign investors are selling China like there is no tomorrow to get their money out. But it's not just foreign investors, it's investors in China that are trying to get their money out as well right now. There's such a scramble to get money out of China that Chinese traders are paying for 40% more than the value of the assets to buy these funds. We're seeing unprecedented levels of trading activity in these ETFs to get money invested outside of China, and it's not like the central planners in China are just sitting there watching all this happening and hoping that it stops. They are printing money like there's no tomorrow to try and stop the tumble. The balance sheet for the central bank in China has grown by $844 billion throughout 2023, but despite that printing, it doesn't look like even that is enough, and so right now they are considering a stock market rescue package of $278 billion, and as a result of all this stimulus we are now seeing China's bond yields back at the lowest they've been in 2 decades. It's a blood. China is collapsing.